the Supply Chain Secrets Podcast, the ultimate insider's guide for all things ocean shipping. Brought to you by NYFI, helping you deliver through volatility.
Hi, everyone. You're listening to the Supply Chain Secrets Podcast. I'm your co-host, Caroline Weaver, and with me is Lars Jensen. Lars, how's it going?
It's going great. I am back in my home office after a small business trip to Bahrain over the weekend, which became, unfortunately, a little bit too exciting as hostilities are flaring up in the region as well.
Yeah, a bit scary. Glad you're back safe and sound. It's always good to have you in home base.
Let me just mention, people should not feel sorry for me. They should feel sorry for the thousands of seafarers who are forced to still stay down in that region.
That's true, yeah. If you're able to leave, it's obviously a much better situation. Well, let's go ahead and jump into this week's NYFI read. Let me get NYFI Pro up on the screen here. So we have the Asia-North Europe futures view.
Yes. And basically, we see a continuation of the trend we've spoken about for a few weeks, that rates on Asia-Europe continue to go up. They go up quite significantly. I know if you're looking at the graph, you might say, hang on a second, that doesn't look very significant. But what we're doing here is we're showing the full data series going all the way back to the beginning of 2024. And the reason I want to lead off with that is to try to put things a little bit in context. What we're seeing right now, and actually I forgot to mention, you can also see the futures rates here. We talked last week about how the futures rates had already moved up. We still seem to be tracking towards a sharp peak when you look at the rate developments, but more importantly, the spot rates are on the NYFI now. We have now exceeded the peak we saw in the lead up to Chinese New Year here this year. And we are an inch away from also reaching the peak rates we saw in peak season, summer 2025. And if we are to look at the futures rates, we are going to exceed the peak rates from 2025. We are not on track to reach the extreme peaks in 2024 summer, where we were in the throes of the initial phases of the Red Sea crisis. But this is definitely still a very strong market on Asia-Europe. I'm going to touch a little bit later on why that is, but strong, yes, absolutely, and likely to intensify further in the coming weeks.
Good stuff. All right, let's talk a little bit about Asia to US West Coast, US East Coast.
Yeah, again here, like before, let's look at it in a long-term context. Usually we tend to focus more on the shorter term. But the rates in the Pacific, both to West Coast and to East Coast for loaded cargo, again, continues this upwards trend we have seen now for several months. We are not up quite at the peak level we saw in summer 2025. Keep in mind, summer 2025, the peak was very sharp, but also exceedingly short. This was highly dominated by the trade war with China, where tariffs suddenly went from 100+% down to, I think it was 20, 30, 40%, or that was the whole debacle we had back then. Whilst we are not up at those levels, we are getting way up there. We are clearly far above the peak levels on the pre-Chinese New Year this year. And that basically means we should also continue to see a strengthening of this. We got upwards momentum. But when I say upwards momentum, both for Asia, North Europe, and also for the Pacific, it of course begs the question, why? Mm-hmm. And whilst the easy thing would be to say and wave the banner called the Hormuz crisis, it's actually not the Hormuz crisis that is predominantly at play here. The Hormuz crisis has led carriers to introduce fuel surcharge increases, but those fuel surcharge increases are no match for the spot rate increases we see now in the NYFI over the last couple of weeks. These increases are much more substantial than what can be explained purely by increasing fuel prices. So if we dive further into that and say, fine, we've set the scene, where are we on the rates, and start to dig a little bit more into why that is. And the why can actually be found by looking into two different data sources. One data source is container trade statistics, which shows us quite detailed and very credible what happens on the demand side, both globally and at a trade lane level, and try to match it with the detailed capacity developments here from the Sea Intelligence data. If we start out on the demand side, it was just on Friday here, right before the weekend, we got the new data for cargo loaded during the month of April. And of course, for those that then look at port statistics, that's actually cargo arriving during May. So it is very new data from that perspective. Global demand was actually up 4.3%. And whilst this might sound somewhat weak, I mean, we've been used to growth rates 5, 6, 7% for many of the months last year. It is actually quite strong. And for the two trades that really matter here, Asia, North Europe, and the Trans-Pacific, Asia to Europe volumes grew 12%. Trans-Pacific volumes grew 11%.
Wow.
Asia-Europe has been growing strongly for more than a year, and they clearly continue to do so. So there's a very strong demand picture happening on the Asia-Europe trade. On the Pacific, the reality is slightly more complicated. As I think many are familiar with, Trans-Pacific volumes have been negative for basically the last year, courtesy of the US trade war. So why do we suddenly see what appears to be a massive boom of 11%? Actually, it is not a massive boom. Because keep in mind, this is cargo loaded in April. That was right after the so-called Liberation Day. So this was the very early phase of the US trade war.
Right.
At that point in time, US import volumes dropped significantly and created basically a hole in the ground. So when you compare to a hole in the ground last year, yes, the increase looks significant, but it's not really a meaningful measure. If we instead try to make it a little bit more meaningful, we could compare to April 2 years ago. Because that was at least a little bit more normal, and compared to 2 years ago, the Pacific volumes are up only 2%. That means for the last 2 years, they are up on average 1% a year. So yes, 11% growth on Trans-Pacific sounds good. In overall terms, it doesn't signal an explosion of cargo on the Trans-Pacific. It's a reversal back to a fairly steady, very low growth baseline.
Yeah.
On the positive side, though, it does also seem to imply that the negative growth we've seen the last year is the result of a downwards level shift. So it's not a continuing downwards growth momentum. And if that holds, I mean, we should be careful to interpret this as one data point. But if this holds up, we might actually expect to continue to see what on paper looks like high growth rates on the Pacific for the next many months as well. Not because the Pacific is growing that strongly, but because the level shift has now been completed as a consequence of the US trade war.
Yeah, so now we're building back up slowly.
Exactly. So that's on the demand side. Now, since we wanted to try to find the reason for why spot rates are increasing that dramatically, we need to also look at the other side of the equation. So the other side from demand is, of course, what happens to capacity. And I then pulled the data, the weekly data, and aggregated them to a monthly level. Since CTS data on demand is cargo loaded in April, the right comparison would be to look at all the vessels that then departed Asia during the month of April as well, because that's where the demand was loaded onto. And if I do that, then things become real interesting. If we start out on the Pacific side, in the month of April, as I mentioned before, demand was up 11%. Capacity was only up 5%. So for the month of April, one of the explanations why spot rates are definitely on the increase at that point in time, very simple. Demand growth was more than twice as high as capacity injection. So ships were filling up much more rapidly. If we try to look a little bit further ahead, still staying on the Pacific, we don't have demand data, of course, for June or July, but we already have a pretty good handle on capacity because the underlying database includes all known planned departures. What can, of course, change is carriers might decide to either blank sailings or we might see more capacity injection. But for now, for all the vessels that are actually planned, what we see for the month of June is an increase of around 11.5% on capacity in the Pacific. July is actually just short of 5% capacity injection. So if my interpretation that we are digging us out of the hole last year, so to speak, in the Pacific, we will continue to see high demand growth. So from that perspective, you might actually expect to see the supply-demand situation on the Pacific tighten even further, because these capacity injections we now see in June and July would be insufficient to match the demand growth. If we look over on the Asia-Europe side, things become somewhat more complicated. Again, looking at April, we had an increase of around 12% on demand. That roughly matches the increase we also saw in capacity. So from a balanced perspective, capacity more or less matched what we saw on the demand growth side. If we look at where we are right now, June capacity is poised to grow around 12%, but more worryingly, in July, if you look at the planned sailing schedules right now, capacity in July on Asia-Europe is poised to increase 22%.
Now, why is that worrying to you?
Worrying from the perspective if you're then going to see a sharp weakening. And now, if you are a shipper, that is not worrying. That tells you, fine, more capacity is coming to the rescue.
Great news for you.
Yeah, exactly. So, yeah, worrying, that will be from the perspective of the carriers, not so worrying from the perspective of the shippers. The other side, absolutely correct. So even though Asia-Europe has been growing strongly, like 12% in the past month as well, I mean, a 21% injection of capacity, that is highly unlikely to be seen on the demand side. But Asia-Europe is even more complicated because we can split Asia-Europe and look separately at North Europe and the Mediterranean. And they're actually developing quite differently. If we look in April, this is where the spot rates actually also began to tighten a bit. We saw an 8% increase only to North Europe, but a 19% increase to the Med. And if we look forward, where this becomes really interesting is July. For July, and I mean, keep in mind, this happens only 3 weeks from now, North Europe capacity is going to grow 16%, but Mediterranean capacity is going to grow a whopping 30% year on year.
That's major.
That definitely is major, and it should cause everybody pause and say, hang on a second, why would the carriers suddenly increase capacity on the Med by a whopping 30%? That doesn't seem to make any sense. This is where the Hormuz crisis rears its head. You know, I say, well, Asia-Europe, what does Hormuz have to do with that? But keep in mind, for some of the services to get cargo right now from Asia into the Persian Gulf, some of this goes through the ports on the south coast of Oman. That's fine. Some of it goes through the ports in the Red Sea. We have already seen some of the carriers establish new services to service Asia-Persian Gulf via the Med. So you have services now that starts in Northeast Asia, goes around Africa, goes in through the Med, dips their toes down into the Red Sea, the Saudi ports down there, with Persian Gulf cargo, and then moves back out. And this is where methodologically, these services are actually Asia-Med services. So the spillover effect from Hormuz is more capacity is being placed on the Asia-Med service, but it's actually not Asia-Med cargo. It's Asia-Persian Gulf cargo. And that makes it a lot harder to interpret exactly what is going on. But at the end of the day, unless something changes, we should see sustained pressure on the Pacific from a supply-demand balance as it looks right now, going into the peak season, whereas the Asia-Europe service might actually see this peak season begin to taper off earlier than expected, not because of demand, but because of supply.
It's a really interesting scenario. I mean, do we normally see things like that where you're servicing multiple trade lanes, you know, especially during times of global crisis like right now?
This is a fairly typical phenomenon. Let's compare it to something else. If you look at the U.S. market, which of course you can service Asia either through the U.S. West Coast or the U.S. East Coast, and what is completely normal to see there is whenever there is fear of, for example, a port strike on one of the coasts, some of the services and cargo tends to shift over to the other coast, and then it moves back and forth depending on where the risk seems to be.
Yeah, that's a good point. Well, interesting stuff. It'll be interesting to see how things sort of play out over the next month or so because, yeah, we're already in June. July is not very far away. And if we've got this much capacity going in, planned for July, especially on Asia Med, that'll be certainly a very curious development.
Yes.
Let's talk a little bit about the Hormuz crisis. So there's been a lot going on. Can you catch us up?
Yeah, the main headline is things have deteriorated dramatically also over the last 24 hours. From a situation a couple of weeks ago where one could be at least cautiously optimistic that there might be some sort of deal and this could potentially open soon, what we have seen escalate here over the weekend is Iran first verbally made it clear that they saw the conflict between Israel and Lebanon as an integral part of the Hormuz crisis. And they escalated that to then have missile and drone attacks on Israel in the last 24 hours. Israel retaliated. There's now been multiple volleys of missiles and drones back and forth. And with Iran now insisting that Israel-Lebanon is part of it, that pushes out the likelihood of a resolution and opening the Hormuz Strait realistically quite a bit. And what we're now also seeing, this just came in within the last hour before we went on the podcast, there is now fire on an oil tanker crewed by Indians. It is unclear exactly why that is on fire. It's off the coast of Oman. But again, given the region, we cannot rule out that this is either a strike or yet another wayward mine. Also making the conflict even more complicated. We have already known for a long time that Iran says you need to pay a fee to get through to the Revolutionary Guard. We also know that if you paid that fee, you would be in violation of US sanctions. But the EU here within the last couple of hours now also announced that the European Union have placed sanctions on the Iranian Revolutionary Guard, which in all likelihood means that if you pay that toll to go through the Strait of Hormuz, you will now be in violation of not only US, but also European Union sanctions. So for shipping lines thinking through, should I just pay and go back and forth? This is another complication. You need to think very carefully about what your markets are, whether it's okay to run that risk or whether you are dependent on markets where you might then be subject to penalties or secondary sanctions if you choose to go through. And the last one to mention here is now the Houthis have entered the stage again. Keep in mind, ever since the Hormuz crisis broke out now 100 days ago, the Houthis have not shot at any ships, and they have only on a single occasion shot a missile at Israel. Now they have done that again. And what is more noteworthy is the statements that came from the Houthis this morning. First statement was that now the Bab el-Mandeb is closed for Israeli ships, which is really more rhetoric than anything else because de facto it has already been closed for Israeli ships.
Yeah.
But the reason why this is important is that ever since September last year, the Houthis had said that there was free passage for everyone. It's just most people didn't trust this to last. So this is, technically speaking, an escalation from the point of the Houthis. And more importantly, they have also been very clear that, and again, their focus is Israel and not what happens over in Iran, that if Israel doesn't back off, they will escalate further. Again, an escalation process we have seen them talk about and implement before. And the next escalation point in that would be targeting more vessels than only Israeli vessels down in the Bab el-Mandeb. So this is also a worsening of the Red Sea crisis compared to where we were just 24 hours ago.
Yeah. So, I mean, if the Houthis expand attacks, do you expect any meaningful rerouting of container services, or effectively most carriers are already not going through the Red Sea?
There will be some rerouting. The problem is, again, the spillover effect this will have. Right now, and you have had that for a couple of years, you've got a wide range of smaller niche carriers that go perfectly fine from Asia up into the Red Sea, carrying cargo to, for example, Saudi ports like King Abdullah Port, like Jeddah, and service the Saudi market. What has been happening the last 3 months is this also serves as part of the rerouting around the Strait of Hormuz. So these niche carriers could take cargo from the rest of Asia, move it through the Bab el-Mandeb up to Jeddah, and the cargo could be moved overland. If the Houthis strengthen this and begin to shut it, keep in mind these niche carriers that do go through the Bab el-Mandeb are right now unable to go through the Hormuz. So if they strengthen that, Iran was threatening that just a week ago to close the Bab el-Mandeb the same way they did Hormuz. That means that these niche carriers won't be able to go through either. This will force some of the overland cargo into the Persian Gulf down to the Omani ports, and the supply chain is already completely chock-a-block full with whatever cargo you can move overland up to the Persian Gulf. And this is the concern. I mean, seen from an Iranian perspective, if you want to escalate the pressure on not just the US, but on international economies, this would be the move to do, because this restricts the bypass you can do of the Hormuz.
Yeah, so there's definitely room for it to be dramatically different.
Yes.
Yeah, okay. All right, well, we'll keep an eye on this. The last kind of set of news we wanted to talk about today was regarding Panama. So what's going on there?
Yeah, there are multiple things here around Panama, and it's really a continuation of stuff we have been touching upon before. But much like the Hormuz Strait, unfortunately, this is also facts on the ground that seem to confirm that we are heading to a more challenging situation. First one off is weather. We have already previously talked about the prediction for the El Nino weather phenomenon, and that there is a 98% chance of El Nino by the end of the year and a 67% chance that it's going to be severe, which would cause draft restrictions. And it appears now the Panama Canal authorities are also concerned that this could be an issue. They had issued an advisory to ships that from July 3rd, there will now be a draft restriction in the Neo-Panamax locks of 49.5 feet. So that's a beginning restriction that we're beginning to see here through the Panama Canal.
Yeah, let's talk a little bit about what that is for those that might not be familiar. What is a draft restriction?
Yeah, I mean, maybe for those unfamiliar with the Panama Canal, I mean, if we take it all the way back, they might not be all that are familiar with how the Panama Canal even works. I mean, the Panama Canal, unlike the Suez Canal, which is just a trench you dig through land and you sail through, that's not the case with the Panama Canal. You got a mountain range in the middle. So you need to lift the ships up and down again using locks. To do that, you need a lot of water. And that water comes from Lake Gatun, which is in the middle of Panama. There are no pumps that are pumping water up and down. This is purely gravity at work. So this lake needs to be replenished every year with rainfall, which most of the years works perfectly fine. The problem is if you then have a severe drought, like you usually get when you have a strong El Nino, there's not enough water then being replenished up in Lake Gatun. So every time a vessel transits, you lose some water from the lake. And if you don't get enough rainfall, that water is not fully replenished. Now, the deeper the draft a vessel has, the more water you need to displace to move it up and down. So that you're beginning to do a draft restriction already now seems to indicate to me that the Panama Canal authorities have looked at these weather forecasts as well and say, okay, there is a high likelihood this could be a problem, so let's start water conservation already now. Let's not spend more water and let more water out of the lake unless we absolutely have to. So I think this is a prudent step on the part of the Panama Canal to try to at least mitigate what could become a significant issue in early 2027.
Yeah. So what does that actually mean in terms of the vessels that are impacted? 49.5 feet, do you still get a lot of the vessels covered with that, or what happens?
Yeah, at least according to some of the statistics I've been able to find is this would impact maybe 1 or 2% of the Neo-Panamax vessels that go through, which in statistical terms would mean 1 or 2 container vessels per week. You got between 10 and 12 of the major vessels go through every day. So it's not a massive impact at this point in time. It's not something where people should be concerned. Does that mean I can't get my cargo through Panama? No, that's not a concern at all. I actually see this early step as a positive sign that the Panama Canal authorities are taking this serious and are already now beginning to take steps to try to mitigate the problem as much as they possibly can before the problem actually arises.
Yeah, it seems like a really good plan of action, just try to use less upfront, and then it's hopefully less of a dire situation and doesn't have to come to anything more severe.
Yes.
Interesting. Well, thank you for sharing that. I think that'll be useful for a lot of listeners, especially that aren't super familiar with how that works down there.
Just staying on that one for a second, because you asked before, does cargo then, do you have trades where cargo moves on different routes? Mm-hmm. This is again one of them. If you think back a few years ago when we did have draft restrictions also because of El Nino, well, that meant that cargo that used to go from Asia to US East Coast through the Panama Canal, some of that had to be rerouted. Some of that could go via the US West Coast and then be railed. That is more costly. Some of that could, of course, go the other way around the world. In the old days, that would go through the Suez Canal. But right now, that's not an option. This is where the Red Sea crisis then rears its head. So if you've got draft restrictions in Panama, you might see some of your cargo rerouted to go the long way south around Africa. And also, if we think back a few years ago when we had these restrictions in the Panama Canal, we actually saw some container vessels make journeys between East and West South America, going south around Cape Horn at the southern tip of South America.
Wow. Yeah, so that definitely adds a lot of transit time if that is the case.
Yeah.
Do you see any other options in terms of overland routings with the draft restrictions, for example? Do they ever offload containers to try to meet the maximum draft limit?
Yeah, last time we had the draft restrictions, that was, of course, good business for the rail line that goes across Panama. There is a rail line that connects the ports and terminals on either side. Maersk is operating that one. But like everywhere else, a rail line is a supplement. There's no way it can take the full force of everything that moves, but that is an option. Another option that has now appeared and wasn't here the last time we had the draft restrictions is the overland, the rail that has opened up in Mexico, linking the Mexican west and east coast. Again, this is very restricted in terms of how much capacity can actually be moved, so this is not something everybody can just do. But for some niche cargo that might be willing to pay for it, this is also an alternative option that's now on the table.
Yeah. We might be getting a little ahead of ourselves because we're not quite there yet, but it's good to talk about some of these more creative solutions if it does come down to it. All right. And I know we had one more topic today to talk about the vessels that are not being flagged from Panama, and those are changing. Can you talk about that?
Yeah, because this is, again, circling around Panama, and now geopolitics come back in. Just as a recap, I mean, we have a geopolitical spat between US and China. We actually have multiple different ones of those. One of the issues between US and China stems back from the beginning of last year, where the US was claiming the Panama Canal was controlled by China. There's basically no basis to say that. That seemed to be resolved by selling some of the Hong Kong-based Hutchison terminals. The deal fell through. The Panamanian Supreme Court then early this year ruled that the concession given to Hutchison was given on a wrong basis and stripped the concession away from Hutchison. Geopolitically, that seemed to solve the situation with the US. The problem is now China is not very happy at all. How do we know China is not happy? Well, if you look at, Lloyd's List Intelligence put out some very, very interesting numbers. Number one is, in every country, of course, the country has the prerogative to make vessel inspections. That vessels that come into your waters, they can inspect them. Are they seaworthy? Do they have the certificates? And that's perfectly fine. But what you saw over in China is, after this ruling by the Panamanian Supreme Court, the number of inspections specifically for vessels flagged in Panama has skyrocketed. Prior to this ruling, China would typically inspect 15 to 20 vessels with Panamanian flag. After the ruling, it was no longer 15 to 20. We are now at 130 vessels per month being inspected. For the shipping lines, you can say, why would the shipping lines care if their ships are in good working order? The shipping lines would care because inspections take time, which delays vessels, which costs money, which disrupts your operations. And for most shipping lines, they are commercial entities. They do not want to be hostages in a geopolitical fight between US and China. So if a shipping line says, I don't really want to be part of this fight, the easiest way out of that is reflag it away from Panama. Now, the next question then becomes, but are shipping lines actually doing this? And the numbers from Lloyd's List Intelligence shows absolutely yes, they are. Again, prior to this, you would typically see roughly around 50 vessels every month being flagged out of Panama. There are also vessels coming in. They're not showing how many come in, so we're only looking at the net outflow here. So about 50 vessels were flagged out. When you see this increase in these inspections, it goes from 50, now it's at 130. So suddenly an additional 80 vessels per month are leaving the Panamanian registry. Is that important? Well, it actually is. You've got about 8,000 merchant vessels in the Panamanian flag registry, which means that right now, because of this US-China political battle, the Panamanian flag registry seems to lose 1% of their vessels every month right now. That is quite significant, and to me is a good illustration of how countries can be trapped in some of these geopolitical games. Again, remember, this is not about Panama at all. This is a geopolitical struggle between US and China, but in this case, Panama is caught in the middle.
Yeah. What does it effectively mean, though, if there's less vessels registered to Panama? Do they lose any sort of leverage?
That basically means there's a lot of business lost in Panama. It's big business in some of these flag state countries to run these massive ship registries and all the services that comes along with it. So for Panama, it's a loss of business. For shipping lines, it's a matter of, fine, I'll just reflag somewhere else where I don't get caught up. It's not the first time. Remember late autumn, this is when the US wanted to place $1 million fees on Chinese ships. And the reaction from the shipping lines were extremely predictable. They were also moving around flags and also ownership, because this was not just Chinese flag ships, it was also if the ships were owned by Chinese entities or if they were financed by Chinese entities. So the shipping lines were very quick to change ownership or to change the financing, so they didn't get caught up in that. So the shipping lines react the same time every time. They don't want to be subject to this. If they can move which legal registration they have, that is exactly what they do. And this is what we see right now is hurting Panama.
Yeah, it seems at first it's just more of like a nuisance to have to deal with, but then you see the dominoes and how they fall, and ultimately it's kind of a clever way to sort of retaliate. Anything else you wanted to talk about today, Lars?
No, I think we covered all that is important, so I'm just going to finish off by saying it is now day minus 23 before my departure to Africa on the Synchro Sally voyage.
Major. I'm very excited to hear all of the updates, and hopefully we have solid internet connection so that the podcast can go smoothly, but yeah, either way.
That is most certainly the plan. I do have a Starlink with me, so there should be good coverage.
Good. All right. Well, thanks everyone for tuning in today. We'll be back next week. Next week, we'll actually be releasing the episode on Tuesday. So just keep your eye out for that. If you haven't already subscribed, we're on Apple Music, Spotify, and YouTube. And until next week, I hope everyone has an awesome week. Bye, everyone.
Thanks for listening to the Supply Chain Secrets podcast, presented by NYFI. Be sure to subscribe on your favorite podcast app.